Hello, from LPL Financial. Welcome to The Talking Point. I'm your host, Quincy Krosby.
Good morning, everyone. This is Quincy Krosby. It is The Talking Point. It's Monday morning, October 21st. And right now, I'm looking at the futures market. It's actually turning into the red, moving into the red. I think we're going to see it on and off, probably all morning before the market opens. But concern is mounting over the Middle East, whether or not this conflict is going to expand deeper into moving towards Iran. But the question is, when will it happen? How will it happen? And whether or not we will see the diplomatic efforts to keep this a lid on this conflict. So the market is concerned. We're seeing gold prices climbing higher because of a question about risk in the global geopolitical arena. Also, in addition to all of that, we're seeing oil prices beginning to inch higher again. Mind you, they're not surging higher. By no means am I saying, are they surging higher? We're just seeing oil prices begin to climb a bit higher. Obviously, there's concern about what is Israel planning on doing, and we are going to have to watch this unfold. Keep in mind, however, the diplomatic efforts are ongoing to try to keep this contained and keep this perhaps moving towards an agreement of some sort. In any case, 20% of the S&P 500 will be reporting this week. One of the focus will be on Tesla. And this is going to be very interesting because of the introduction of their self-driving cab, self-driving taxi didn't go well. I think the market wants to hear, why was that? What are the plans? But the market will be very much focused on Tesla. And keep in mind, too, that the big package of tech earnings will start next week. So we'll keep our eye on the semiconductor sector. We'll see what the market does with the semiconductors. We'll look at the Philadelphia Semiconductor Index, the SOX. That will give us an indication of what the market is looking at. Also, this week, we have a bit of macroeconomic data coming out. One of the ones that I'm going to be looking at will be the durable goods. That comes at the end of the week. I want to see whether or not there has been a pickup in durable goods orders. And in addition to that, the capital expenditures, because there's a component that tells us what companies are doing. What we're seeing and hearing from companies is that they're waiting. They're waiting until after the election. And that may be actually reflected in these numbers. Similarly, on Thursday morning, the initial unemployment claims and continuing claims continue to be very important for the market. But we're going to see, obviously, the effect of the hurricanes and folks, having to go and sign up for unemployment. So you've got to take these numbers and expect that we could see a potential pickup in those initial unemployment claims. Interestingly, last week, we didn't see any. In fact, they basically leveled off. So we'll see if it starts to pick up. So we have to understand that we're going to have kind of a chop in the data releases, particularly where it comes to the employment landscape. Also, we're going to have the Fed Beige Book on Wednesday. And, I always hear people saying, oh, it doesn't really matter. Well, you know what? More and more it does matter because it is perhaps the most up-to-date reports. All of the data that we get, the data for GDP, it's looking behind. But the Beige Book, and this comes from the Federal Reserve banks across the country, speaking to business owners, speaking to banks, speaking to small business owners and large business owners to see what they are seeing in their own regions. And then we get a picture across the country. And the thing is, it tends to be more up to date than most of the data releases that we get. And especially because right now there is a concern. Are the numbers that we're seeing for GDP, for example, that keep rising over 3%, or is it reflected in the reports that the Federal Reserve banks are actually getting from on-the-ground news from the companies, small business owners, and the commercial banks? So the Fed Beige Book that comes out 2:00 Eastern Time on Wednesday is something that the market's going to pay attention to. We're going to have new home sales this week as well. But one other thing that we're going to have is existing home sales and leading economic indicators. But I do want to add, there will be a flash report. This is from the Purchasing Manager Indexes, the PMI, but not the ones that we usually look, which is the Institute for Supply Management, the ISM, that I talk about all the time, the ISM manufacturing, the ISM service sector. S&P Global has its own version of it, and they will be coming out this week with the flash reports. And what does that mean? It means it's not the final report. It's kind of a quick and dirty report. That's the way I call it. It sounds awful, I know that. But, it said, okay, this isn't the final report, but this is what we're seeing. And they will come out for manufacturing and also the service sector. So that's going to come out this week as well. But overall, it will be about earnings. And remember, it is the market following events in the Middle East. There's also chatter, by the way, and I think I mentioned this last week, that Ukraine and Russia inching perhaps, and this is a big question mark, perhaps closer to some kind of sit down of some sort, of a negotiated settlement. Many obstacles in the way, there's no doubt about it. But the question is it serious? Can they actually get to that point? Well, the market is paying attention to that as well. And also, let's go over to China for just a minute. More cutting rates from the banks, which always is stimulative. There's no doubt about that. But remember, the market, picks up, and then the market gets disappointed, perhaps at the next press conference, that, maybe they're not doing enough on the fiscal side of the equation. The fiscal side of the equation means this. It's the government's money, the government creating, in essence, a deficit. And China, by the way, they have been saying, look, we can do that. We can offer more money for some of these problems because, actually the deficit in China isn't overwhelming by any means. However, the numbers aren't coming in. But on the monetary side, which is what the central bank has to offer, they have been doing quite a bit in cutting rates. But the market wants to hear more. And I can't stress this enough over and over. It sounds probably so boring, but the property market, this is one of the major problems, is because so many Chinese have their money in their homes. They have mortgages that they're paying for condos, that's homes, condos that haven't been finished. And, if they could go online all the time to complain about this, they would, but it's always shut down by the Chinese government. So again, the market gets excited, it gets hopeful, and then it gets disappointed. So we're also following that. But also what we're following is, in terms of geopolitical risk, is any more commentary or actually military incursions, sort of flyovers on Taiwan. That has picked up in a meaningful way. And the markets are very much focused on that as well. So there's an awful lot for this market to digest, not only domestically here in the U.S. during the earnings season for the S&P 500, but also globally. And this is the market's job, isn't it? Its market's job is to navigate all of this. And the market has done quite a good job in navigating and not getting too excited about geopolitical risk, taking it, measuring it, and making a decision as to whether or not it warrants, a sell-off. We're not there, and we hope we don't get there yet. But the market is ever focused on all of this. And needless to say, in addition to that, we're following all of the events regarding the campaign moving towards Election Day. Have a very good week. We will be back next week. Thank you all so very much. Bye-bye.
This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and are subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer, member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.